Hi, everyone, and welcome to Xtract One's live first quarter earnings call for fiscal 2023. This is Will Mays from RB Milestone Group. For those of you who aren't already aware, Xtract One Technologies, formerly known as Patriot One Technologies, is an emerging disruptor in the stadium and public space security and security industry, and has developed an unobtrusive artificial intelligence-driven weapons and threat detection system. The company's shares are traded on the TSX under the symbol XTRA and on the OTCQX under the symbol XTRAF. Joining us today is the company's CEO and Director, Peter Evans, and CFO, Karen Hersh. Today's earnings call will include a discussion about the state of the business, fiscal quarter results, and some of Xtract One's recent milestones. This will be followed by a question and answer session based on the questions we've received prior to the call and also during the webcast. If you're interested in asking a question or logged into the Zoom app or a web platform, you can submit your question directly to us in the Q&A module. This call is being recorded today, December 6, 2022, and will be available on the company's website after the call. Before we start today's call, I would also like to note that all dollars are in Canadian unless otherwise specified. Today's call may also contain forward-looking statements that are subject to risks and uncertainties that may cause actual results, performance, or developments to differ materially from those contained in the statements and are not guarantees of future performance of the company. No assurance can be given that any of the events anticipated by forward-looking statements will occur, or if they do occur, what benefits the companies will obtain from them. Also, some risks and uncertainties may be out of the control of the company. Xtract One has a full disclaimer contained in their presentation. Today's call should be viewed along with the company's interim condensed financial statements, management's discussions and analysis, and earnings press releases issued today and are available on the company's website and its SEDAR profile. Lastly, RPMG is not a registered investment advisor or broker-dealer. For more information, please visit our website at rbmilestone.com. And now it's my pleasure to introduce Mr. Peter Evans, Chief Executive Officer of Xtract One. Peter, the stage is yours.
Well, thank you very much, Will, and thank you again to all of our investors for joining us today. We're very pleased to be reporting our first quarter results for fiscal 2023, and the second quarter in a row where we demonstrate a growth trajectory that we're on and the growing momentum and interest that we're seeing in the business. Based on the strong results that we've seen in the quarter, we're very optimistic about the outlook for fiscal 2023. I'd like to start by giving our investors a quick update on the business and some key milestones that we reached over the past quarter. Later, Karen's going to take us through the financial results and the financial trends that we're seeing that are key to the business. There's several highlights for this quarter that many of the investors have expressed strong interest in understanding. So let me address those first very succinctly, and then we'll get into the details. The headlines of these are simple. There's questions about our business momentum and bookings. In the first quarter of this 2023 fiscal year, we essentially booked as much business in that quarter for our platform solutions as we did for the entire fiscal 2022. That bears repeating. We did as much business in the first quarter as we did in all of the prior year. The business has hit an inflection point, and we expect this bookings trend to continue throughout the balance of fiscal 2023. Our booking performance builds on the reported results of our fiscal 2022, Q4, where we booked 840% more business than in fiscal 2021, with approximately 66% of that coming in that fourth quarter following the announcement of the Smart Gateway. The second key highlight is the customer growth and retention. I'm very, very pleased with the continued growth of new customers and contracts. We've been announcing almost one per week. We've brought on new brand names like Oakview Group and the San Jose Sharks in the sports and venue management businesses, and we've expanded into other market verticals, such as manufacturing, schools, government offices, much sooner than we had originally anticipated. We had planned to and had targeted to primarily focus on the sports and live entertainment interests. But the high interest from these other segments and the pull that they're creating on us has really grown our pipeline also. Today, nearly 50% of our sales pipeline is made up of markets outside our target market of sports and live entertainment. This is further satisfying. What's further satisfying to me out of all of this is right now we have 100% customer retention A third highlight for me is the focus on scale. If 2022 was the year of execution for the company, listening to our customers, establishing the business, delivering Smart Gateway in record time, then fiscal 2023 for me and for the rest of the company is the year of scale. Scale comes from driving business efficiencies across the entire value chain of the company, from building a qualified pipeline, converting that sales pipeline to bookings, converting the bookings through manufacturing, installation, and support into revenue, and doing this in a scalable, repeatable, cost-effective manner. On the cash flow front, we continue to focus on cash flow management, judiciously investing where it makes sense, particularly in sales and customer support, to convert those bookings to revenue. We're trying to accelerate our pipeline as quickly as we can and accelerate that conversion of bookings to revenue, and we'll judiciously invest in doing so. We're highly focused also on taking out the costs of business, for example, customer acquisition costs, and converting those bookings to revenue with the objective to achieve cash flow break-even. With the current business model, operation model, and projected bookings and backlog trajectory, and with 2 quarters of trend information behind us and in hand, we have line of sight now on the path to cash flow break-even. Finally, an item that Karen will be talking about in more detail, there's questions about and interest in where we are from a cash position. Similarly, we have line of sight, which Karen will go into in a lot more detail. Before we dive into more details on our quarterly update, I wanted to spend some time addressing our new brand and new color palette that many of you have seen over the past week. We announced on December 1st that we were rebranding the company to Xtract One and formally launched on December 1. In the past 18 months, we completely reinvented the company. We've refocused our product efforts and our product offering and our go-to-market strategy to bring that product to the market. And we've positioned ourselves as a trusted security provider and an innovation partner for our customers. With this incredible success we've seen over the past few quarters, we're in the midst of taking a leap as a company. We've disrupted the physical security industry as a whole, and we're very proud of the momentum that we've gained. At this turning point, at this inflection point that we've seen, it's an appropriate time for us to recognize this and relaunch ourselves with a new corporate rebrand. As of December 1st, the company now operates as Xtract One Technologies. Along with this, our securities now trade on the TSX under the symbol XTRA and the OTCQX under the symbol XTRAF. Over the past 18 months, as I mentioned earlier, we've worked hard to kind of build this trust with our customers and make it our priority to have their best interests at heart. Our solutions and our approach to disrupting the physical security market is founded on the premise of pushing the limits of what's possible with artificial intelligence, coupled with very high levels of service to create the best results and outcomes for our customers. This process has been very long and arduous, right? But well worth it considering the success that we're now experiencing as a company and beginning to reap what we sowed. This rebrand is important to me also because it reflects and aligns with who we are as a company and the outcomes and the value that our customers have told us that they achieve from us. They see us as a tech-forward company and our vision to create a world where great experiences and safety work hand in hand with each other. So we're a new company with a new name that fits our new brand values. And we're working to help improve the lives of all of our customers and our customers' customers with an enhanced safety and experience solution. We're also very pleased that we're now delivering a new growth trajectory for our investors. And finally, with this branding, we're shedding the final remnants of the past and delivering a new vision steeped in those brand values that we hold very true. So as we think more about this new trajectory for the business, we have experienced incredible growth over the last few quarters. This is a direct result of our accelerated sales and marketing efforts in the past 12 months, where we showcased our product to customers in their environments. These activities and the feedback we received from those customers during some of those activities led to the release of the Smart Gateway portfolio and platform towards the latter part of last fiscal year. Smart Gateway was purpose-built to solve core issues being faced by our customers. They shared with us what they needed for their business operations, and they shared with us what they liked and they disliked about other solutions, and we improved upon both. The enhancements in our product and the focus that we put into building those solutions that meet the needs of those customers have actually led us to receiving 2 gold awards from American Society Today's ASTER 2022 Homeland Security Awards. These awards are part of the U.S. Homeland Security Awards program that recognizes industry leaders in categories that include physical and border security, cybersecurity, and others to acknowledge, to acknowledge those companies' efforts to keep the nation secure. We're very honored to win both of these awards for both the best pedestrian entrance control system and the best metal or weapons detection categories for our gateway's highly effective capabilities. These activities, along with the release of Smart Gateway, have had a dramatic impact on our sales. In October, I shared with investors that we'd signed 840% more in contract value for the platform itself, and those agreements were signed in fiscal 2022 than we did in all of fiscal 2021. During the first quarter of fiscal 2023, as I mentioned, the contract value of signed agreements for the platform was essentially equal to all platform contracts during the prior year. In the first 3 months of fiscal 2023, we signed contracts for almost as much as we did in those 12 months in fiscal 2022. To date, the total value of this contract signed as a company is almost $12 million, of which approximately half has come in the last 6 months. So over the history of the company, we've done very well in the last 6 months. This is a testament to all the work of our sales organization, our marketing groups, the engineering teams, who over the last 18 months, who collected and executed on that feedback from the customer and delivered them the solution that they requested of us. One recent customer win I'm very proud of is the Lakewood School District in New Jersey. We're very pleased to be selected by the school district after an intensive analysis and evaluation of a number of different solutions that were available in the market today. Lakewood is considered to have one of the most stringent security models, and people go to them to look for best practices. It's a model by which other school districts look to repeat across the country. We're very pleased to be partnering with them. Student safety was at the forefront of their minds as they started to look at solutions, and they had to deal with classrooms. So they had to deal with student requirements for safety in a number of different ways, in the classroom, at after-school extracurricular activities, on the sports fields, and these sorts of things. Lakewood made it very, very clear to us they need a security solution that was very versatile and very flexible to work in all of these situations. For everyone at Xtract One, it's been incredibly rewarding to work with Lakewood School District and be able to help provide them the solution that they needed that fit their needs, as opposed to had to be forced into their needs. The acceleration in sales is also due in large part to the major strategic partnership we announced with Oakview Group in early October, in our first fiscal quarter. This organization owns and manages several hundred venues internationally, including hosting NHL, MLS, and other pro sports venues, along with convention centers, theaters, and other live entertainment venues. The strategic partnership with Oakview Group, otherwise known as OVG, has enabled OVG owned and operated organizations and venues to utilize our Xtract One patron screening solution in a very, very streamlined manner. The partnership was a culmination of many, many months of work doing rigorous testing with the preventer advisor organizations who did such things as red teamed us at events such as the NBA All-Star Game to validate our technology on behalf of all of the Oakview Group venues. Prevent Advisors is a subsidiary of OVG, which works with the NBA, NHL, MLB, and others to validate their security programs and their security solutions. They're preeminent provider of this kind of solution for pro sports teams. The partnership with Oakview Group has significantly streamlined and simplified the buying process for all of their venues. In the last few months, we've announced several wins with OVG, affiliated organizations such as Angel of the Winds Arena, who is the home of the WHL's Everett Silvertips, Total Mortgage Arena, which is the home of AHL's Bridgeport Islanders, Acrisure Arena, the home of AHL's Coachella Valley Firebirds, and we're engaged in many, many more discussions with numerous other OVG venues regarding their security needs. I'm very pleased with the inbound pace by which we're seeing interest by the OVG organizations. With these wins over the last few months, along with our announced sales so far in Q2 of 2023, it's evident to me that the incredible demand exists for our platform products and is accelerating for our platform products. I believe that this is just the beginning. We're still in the commercialization stages and have yet to begin to truly tap the total addressable market for our products and our solutions. The technology is complex and is difficult to replicate. This creates very high barriers to entry for others to enter into this space, and that will continue to allow us to capitalize on the market opportunity. And so I seek a huge future growth potential for the business, as evidenced in the past 2 quarters. Excuse me. We continue to work with customers throughout the entire sales cycle, and we continue to see growth of the pipeline as a result of this. Our sales pipeline has grown to about $74 million of qualified opportunities at the end of October, almost 20% higher than the end of last quarter. The sales pipeline, though, has also changed significantly in composition. 9 to 12 months ago, approximately 2/3 of the opportunities were tracking into that sports and entertainment market, the market that we were specifically targeting for the best product market fit. Today, that number is about 50% of our total sales pipeline. We see now markets like manufacturing, distribution, schools, healthcare, government bodies are making up a significant portion of our sales funnel. So while we're still focused on the sports and entertainment industry as our primary marketplace, we continue to see strong interest in these adjacent marketplaces, and we will serve them when there's a good product market fit for our solutions. These new markets open us up, though, more importantly, from about a $4.6 billion marketplace based on our calculation to about a $40 billion marketplace. It's opened that market up to us sooner than we expected, and we're graciously accepting that and moving into that market quickly. Investors who attended the AGM in November would have heard me talking about scaling the business in fiscal 2023. Part of this is directly tied to our base of installed products across North America. Based on the current backlog of signed contracts at the end of the quarter, we're on a path to double the number of installed Smart Gateway systems in Q2. As we work to convert these contracts to revenue, we will continue to push more and more of the solutions out into the marketplace. This means doubling our current annual recurring revenue, providing investors with much more predictable revenue streams, and also supporting the business with much more cash as needed to continue to increase that customer base further. I alluded earlier to a 0% churn in our customers, which I really believe is because of the focus we've been building on building trust with our customers throughout the sales process and think about their security needs holistically, not just in terms of a product. We act as partners and advisors to our customers, and to the best of our ability, we'll continue to do that for them. In these cases, these challenges get added to our product roadmap as the customers provide us insights and things that will further streamline their security operations. It's our intent to always make sure we're the first product and the first solution that will meet their needs. Looking at the increase in customer engagements, the backlog, and the pipeline, I'm very, very proud of how far we've come in such a short period of time and significantly over the last couple of months. My outlook for the remainder of fiscal 2023 is very positive due to the groundwork that we've laid in the last 18 months. And I expect Xtract One to continue to deliver bookings very similar or better than what we've seen in fiscal Q1. I look forward to sharing a lot more of our wins with our customers. It's something that makes me very personally happy every time we can announce a new customer very satisfied with our solutions. At this point now, I'm going to turn it over to Karen to take investors through the details of our financial results and the first quarter of fiscal 2023. Karen, over to you.
Thanks, Peter, and hello, everyone. I'm happy to be presenting our first quarter financial results for fiscal 2023 and to share some financial highlights and key milestones we've hit during this quarter. On the whole, we're very pleased with our quarterly results. As you'll see in the slide chart, our revenue for the platform business is trending upwards quarter over quarter, particularly since Q4 of fiscal 2022, when we started to see the benefits of our Smart Gateway product. First quarter revenue was $650,000, which is slightly lower than the $710,000 from last year. However, revenue from our platform operating segment increased by 125% compared to last year. Moreover, platform revenue for the first quarter of the year is over half of the platform revenue recognized during all 12 months of last year. We expect this trend to continue in future quarters as we build recurring subscription revenue and continue to increase our install base of subscriber contracts. Today, between 60 to 70% of our platform contracts are done through subscription arrangements. Peter mentioned that our total backlog and signed agreements collectively were $6.6 million at the end of the first quarter. Considering the growth in our backlog and the number of signed agreements, along with strong interest in the market for our products, as evidenced by the growth in our sales pipeline, we expect that our platform revenue will continue to increase significantly in fiscal 2023 relative to last year. We continued to build the company's backlog of sales commitments, which at quarter end was over $2.6 million, with an additional $4 million pending installation or successful trials. This contractual backlog represents revenue that will be recognized in future periods as we fulfill our obligation over the duration of the underlying contracts. The total value of our backlog and signed agreements is 58% higher than the same balance at the end of last quarter. Perhaps most importantly, we're starting to see stronger market awareness for our solutions, which is translated into a shorter sales cycle for our solutions. We continue to see strong interest and demand from multiple market verticals, including manufacturing and distribution, schools, and healthcare markets. During the quarter, Xtract's innovation team continued to duly focus on supporting the internal platform development efforts and the associated machine learning complexities of the various solutions under development, while at the same time also developing and delivering the AI-based solutions contracted through public sector agencies and a growing number of private sector parties. In addition to $220,000 of revenue recognized during the quarter related to professional services, Xtract maintained a backlog of signed contracts of approximately $700,000. This innovative AI team continues to build a pipeline of opportunities and an ever-expanding set of capabilities. Part of our plan to scale the business includes maximizing contract value from customers. We are not the same company that we were 18 months ago. We have a sizable backlog of signed agreements with referenceable customers like OVG, the San Jose Sharks, Kia Motors, and the Office of the Inspector General. This means that going forward, we can leverage credibility in the marketplace to maximize the value we receive from customers in return for our products and services. Many of these strategy changes are already taking place, and we anticipate the impact of these changes to be evident in the balance of fiscal 2023 and into fiscal 2024. Based on the sales activities that we've seen in the last few months and the recently announced partnership with the Oakview Group, where we have previously announced the onboarding of 5 of their venues, we expect revenues to continue to grow at an accelerated rate in upcoming quarters. In the past year, the company's been focused on top-line growth. As we continue to advance our business strategy, we'll also be focused on achieving operational efficiencies and gross margin improvements. While we continue to monitor our operating expenses, which in general are lower than previous years, we continue to review our operations for further efficiency gains. Where appropriate, we've begun redesigning internal processes with the aim of improving our operations to either reduce expenses or to enhance our cash conservation cycle. In some cases, these changes may also include internal restructuring to improve our business processes going forward. As Peter mentioned at the start of the call, our theme for fiscal 2023 is scalability, which we believe is essential as we strive towards cash flow neutrality. Sales and marketing expenses were $800,000 for the quarter, which is 146% higher than the same period last year. This increase relates to the company's intensified sales efforts as we work to capitalize on the existing market activity and interest for touchless patron screening solutions. Included in this period are some one-time expenses that we do not anticipate will be repeated in future periods, as we invested heavily in certain key conferences and demonstrations to showcase our new Smart Gateway solution. This quarter was heavier than usual for sales and marketing expenses, and so we anticipate Q2 will see a small reduction in these expenses. In general, however, we expect sales and marketing will continue to be a crucial area of investment as sales activities continue to be the focus for us. Research and development costs, which is presented net of grants in our financial statements, were $2 million for the first quarter of fiscal 2023, which is an increase of 550% compared to the same period last year. However, last year we had almost $2.4 million of grant funding for research and development to offset our costs. If we look at R&D costs before grant funding, our actual R&D expenses remained relatively consistent, increasing only about 4% relative to the first quarter last year. The company continues to invest in R&D activities as we refine, improve, and expand our platform solutions based on our technology roadmap and feedback that we receive from our customers. Personnel costs increased by 57% to $1.6 million for the first quarter of fiscal 2023. The change is primarily related to inflationary market factors, as well as an increase in the size of our sales and customer support teams, as we continue to focus on revenue-generating activities and providing exceptional customer service to our growing list of customers. As well, the first quarter of last year had some COVID-19 wage subsidies. The actual change in personnel costs is only about $100,000. Is about $100,000 lower after removing the impact of these subsidies. As part of our plans to optimize the company, we continue to assess whether we have the correct mix of skill sets within the company. To date, we've made several changes within research and development, sales and marketing, and corporate functions as we continue to assess our personnel needs as we scale the business. Loss and comprehensive loss was $4.9 million for the quarter, which is 352% higher than the $1.1 million in the first quarter of last year. However, our loss for fiscal 2022 included $2.5 million of non-diluted funding. Excluding these grants, our loss in the current quarter increased by about $1.3 million, which is primarily due to the changes in sales, marketing, and personnel that I previously discussed. Finally, basic and diluted loss per share was 3 cents for the quarter compared to 1 cent last year. Excluding the same grant funding received in fiscal 2022, our loss per share year over year increased by 1 cent. We've made great strides in the last year, and in particular the last 2 quarters, in building up a solid backlog of contracts. As we continue to grow as a company, we'll also begin to focus on improving operational efficiencies as we start to move towards achieving cash flow neutrality. As I mentioned previously, this will be a key focus for us in fiscal 2023. Turning to our cash flow now, during the quarter, the company had negative cash flow of $4.1 million compared to with negative cash flow of $2.7 million in the first quarter of last year. However, during the first quarter of last year, the company had the same $2.5 million of non-dilutive funding. In the current year, we did not receive any grant funding to offset our expenses. To address our rate of cash use, we've developed a comprehensive plan to reduce the rate of cash burn that we're currently experiencing. First, as I previously discussed, we've implemented several new strategies to maximize the value of our contracts. Secondly, we've made and continue to make changes to how we operate our business. These initiatives include internal restructuring of our people, reducing the cost to acquire a customer, investigating strategies to reduce our manufacturing costs, and even reevaluating certain fixed costs, such as our need for office space. Although it will take time for the impact of these strategies to be seen, our expectation is that these changes, paired with the continued growth trajectory of our sales, provides us with line of sight to reach cash flow break-even. Subject to future expansion plans, we expect to demonstrate gradual improvement in our cash use as revenues increase and our business optimization plans get implemented. In summary, we're very pleased with the traction that we've made during the first quarter of fiscal 2023. We see ourselves on an upward trend in terms of the value of contracts signed and units deployed, but our work is not done. Our focus for the next few quarters continues to be on customer engagement, providing exceptional customer service, and scaling our business to provide our investors with predictable recurring revenue and a path towards profitability. And with that, Peter and I are pleased to answer any questions that investors might have.
Thank you, Peter and Karen. We received a number of questions from investors, so let's try and answer as many as we can in the remainder of the time we have. The first question comes in, has to do with the rebrand. This investor is asking, with all the progress that the company has made over the last 2 years, reinventing itself and building trust with prospective customers, I'm curious what Xtract One is doing to make sure that all the brand value from Patriot One, Patriot One's name is not going to be lost going forward with the name change. Can you please elaborate on what you have done to make sure we're not losing brand equity while building Xtract One's brand?
Sure. Great question, Will, and branding, something near and dear to my heart. It's a great question to lead us off. Look, we've consistently heard from existing and prospective customers and investors, and even the employees of the company, that we're a very, very different company than we were 12 to 18 months ago. Our focus is different, our approach is different, our engagement strategies are different. It's very, very true. We've built a very solid product, an incredible product with all the features and functionality that the customers want. And really worked hard to become kind of that trusted security partner. Trust and integrity are sort of the core of everything we're doing internally and externally and every touch point throughout the business. So whether it's with our suppliers, our staff, our customers, And some customers specifically commented that when they work with us, they didn't feel like they were talking to a vendor. They felt like they were talking to one of their own team, and that our staff was, equally interested in the successful outcomes of the project and not just closing a sales quarter. And that really stuck with me, because that's who we want to be. We want to be someone who's along their journey for the next 20 years, not just this quarter. So it really became apparent to me that we kind of had to shed some of the past history of the company as we are on this new journey, and the corporate rebrand made a lot of sense. Throughout persistent engagement with the customers, vendors, employees, we wanted to make sure that when we undertook this, it was worthwhile, and that we actually wouldn't lose any brand equity. We ran multiple, for example, customer focus groups, getting 20, 30 individuals on a call. We did this multiple times and asked them their thought. Was there any damage to our brand if we changed our name? And most of them said, really, not much, right? And most of them were incredibly supportive. It's important to understand and point out, like, a brand is not just a name or the colors on a page. The brand is the people, and it's how they kind of live and breathe the brand and the engagement with the customers, right? It's how you make people feel. And over the past 18 months, we've been sure that every customer has an outstanding experience with us, and our new brand is a place to reflect that. So going forward, we're going to make sure that every stakeholder group is well aware of the name change. We're making sure we're over-communicating to all of the stakeholders. You'll see sort of things like Xtract One, formerly Patriot One Technologies, as a way, as part of this over-communication to those various stakeholder groups, right? This will go out in public news releases, personal phone calls, targeted advertising, everything that we do to make sure that we're re-emphasizing who we are as a company, and that the name is just a name. Right. So anyhow, keeping stakeholders aware of the name and the corporate rebrand will remain an ongoing effort, for a long period of time, so that Xtract One is as familiar or even more familiar, with the company. And it felt to me like after these couple of quarters of incredible trajectory, now was the right time to really, get onto that rocket ride with a new brand name. Hopefully that answers the question, Will.
Great. Thank you, Peter. We've had several questions come in regarding the company's cash position. One of the questions here is, I'm very encouraged by the positive momentum that the company has on the sales front. However, I'm noticing that the company's cash position at the end of the quarter is at a low point. What is the company doing to address this?
I'll answer this one. Yes. It's true. Our cash position is at a low point, and we will likely want to raise capital at some point in fiscal 2023 in order to continue to execute on our business plan. On our last earnings call, I think I mentioned that when we decide to go back to the market to raise capital, it would be in support of our plans to accelerate the business, meaning enhancing our sales, our marketing, our customer success teams, as well as increasing manufacturing capacity to match the increase in the bookings volume that we're seeing. The good news is that we have created a lot of shareholder value over the past 18 months as we position the company for growth. And we have momentum. Our stock price continues to hold strong and has actually increased, I think, 33% since our last earnings call just 7 weeks ago. We continue to hit our milestones, and our story resonates well with the investment community. As a public company, we have many avenues open to us to raise capital, including our base shelf prospectus, which gives us the ability to issue various securities in order to raise up to $50 million. It also gives us more flexibility in terms of being able to obtain funds relatively quickly, sometimes within a matter of days. And so, in summary, we will certainly consider raising capital opportunistically at the right time and for the right reason.
Thank you, Karen. The next question is, the investor is interested in understanding the company's existing target and plans to expand into further sectors. Specifically, the investor asks, I continue to hear about Xtract One's focus is on sports and live entertainment. While this might be a flashy customer base, wouldn't it be beneficial to target healthcare, schools, government offices, and other such locations? There will be many more of these locations that the company can sell to compared to sports arenas. Can you please explain why why you were focusing on these sporting arenas.
Yeah, so Will, we've heard this question a number of times. We've actually talked about it on 3 or 4 other venues, but it's worth repeating again. One of the paths to success that I've always had in my career has always been on selecting your target market effectively. You cannot be everything to everyone. When you're a small startup and you're managing your cash and you're trying to balance all of your operations, you have to, be judicious about where you place your time to get the maximum ROI. So putting it very simply, let's look at the appeal of a marketplace. Sports, right? Sports venues are already using security technology, 40-year-old walk-through metal detectors. They have security budgets. The fans are familiar. And so there's a great place for a technology like ours to come in, disrupt that marketplace, shift the spend that's already there from what they're doing today to something better, and provide them great return on value. The budgets already exist. All we're doing is forcing a shift. In a place like a school, for example, sure, there's 130,000 schools, K through 12 through North America, and nobody wants to see weapons in schools. But realistically, many of the schools are fighting for dollars. And even when there's grant dollars that are applied, there's multiple folks who are then trying to go grab those grant dollars for all sorts of different things, whether it's screening technologies like ours, whether it's camera systems, whether it's locks on doors, things like that. So oftentimes the budget doesn't exist. And you have to go through a very rigorous process with a lot of stakeholders, federal governments, local governments, governors, police departments, school boards, PTA organizations, just to get approval on a budget, which may not occur for a couple of years. And so where budgets exist, where demand exists, of course, we will serve those markets and those segments, such as the announcement we made with the Lakewood School Board, such as the announcements we made with Kia, who are looking to improve their existing security, and other customers like that. So we will judiciously serve those markets when they come to us and they qualify of having the things that make them an appealing market. They have a demand, they have a budget, it's a clear sight to decision-making. But in other places where budgets don't exist and it's a much longer sales cycle with our limited capacity, we will go serve those people who actually have the budgets and the needs and are willing to spend today. So it's not a matter of we're not going to serve a segment. We're going to make sure we're very effective with our time and how we use it. Right? I don't expect us to change this strategy very much, but we're going to continually assess the much broader market and serve those different segments, as they present themselves and as there's a good opportunity there. Next, Will.
Thank you, Peter. The next question, there's a couple of questions that have come in looking for clarity around some of the terminology used. This one specifically asks, can you please elaborate on the difference between 1, the contractual backlog, and 2, signed agreements? And are these different representations of the same customer?
I can answer that. Our backlog, which is presented just in the financial statements, represents the value of contracts that are deployed with customers for which we haven't recognized revenue yet. So this mainly represents instances where customers sign a subscription agreement for, say, 3 years. We recognize the revenue monthly as time passes, and then on the balance of the contract sits in our backlog. In essence, this is probably the most conservative approach to recording backlog, as we only include fully installed and operating contracts in our backlog for financial statement purposes. The value of our signed agreements, on the other hand, which is not included in our backlog, is presented separately in our management discussion and analysis and represents bookings or signed contracts where we've not recognized revenue for the underlying contracts. Typically, this is because we have not installed the product yet. Once the product's installed, the contract moves from signed into backlog and later to revenue in line with our usual subscription agreements. So I guess in summary, we would say that the value represents the different stages on the contracting process and should be viewed as indicators of revenue that be recognized in future periods. And I guess just as a follow-on to that, I would say, and I've heard people ask, are we committed to this subscription model? And I would have to say emphatically, yes. It takes time up front to build an annuity-based model. We're putting in all the hard work now and starting to see the benefits of a monthly recurring revenue. And we are committed to continuing to do that. It's well suited for our industry, and so we will absolutely continue to do that.
Thank you, Karen. The next question relates to some of the statistics that were presented during the presentation. The investor is asking specifically, it was mentioned in the quarter bookings for platforms were comparable to full year's sales from the prior year. This is encouraging, but I'm curious if you can elaborate on whether this trend is something investors can expect to continue in upcoming periods.
Yeah, first, look, I want to say that we're not at a stage where we've seen multiple quarters in a row. So we've got 100% accuracy in forecasting future quarters. Okay, but we are 5 weeks into the second fiscal quarter of this year. So we're not providing specific guidance on contract signings or revenue at this time, right? Again, I can't provide those specific details because they may be misleading. What I will say in response, though, is look, customer interest is very, very high. The demand is ramped. The pipeline is growing significantly, right? The past 2 quarters, if they've shown nothing else, right, occurred right when we, released the Smart Gateway. We hit that inflection point. On prior earnings calls, we talked about 2/3 of our fiscal 2022 bookings came in like the final 70 days of the quarter of the year, right? The first quarter of this year is essentially the same as what we did in the entire previous year. And as I look into Q2, I'm feeling very good that we're going to continue to see that trajectory and that trend continue. So, I'm confident in where we are as a company, right? Everyone at Xtract One is working very hard to capitalize on the backlog of bookings. We continue to see that backlog of bookings growing and conversion to revenue. And, right now I'm feeling very, very comfortable about our forecast for 2023.
Well, great. Thanks, Peter and Karen. We're pressing up against time. And so before we end the call, is there anything else you'd like to leave the investors with today?
Well, look, we're seeing tremendous growth for the business. I did happen to see a couple of quick questions on the chat. Yes, everything's going to be Xtract One and wrapping the towers and things like that. Yes, we are continuing our subscription models. So, and we'll get to some of those other questions and find a way to respond to those ones we couldn't get to on the chat. Overall, though, as I just said in the prior comments, we've had a fantastic first quarter, right? The second quarter is continuing the same momentum. We expect, based on the backlog, we're going to have a great third and a great fourth quarter. We're feeling really good about the trajectory we're on, right? The interest for our products and the inbound calls we're getting, without having to reach out to customers, them calling and pulling us is unbelievably fantastic and nothing like I've experienced in my career. Our corporate branding is complete and it'll continue to be updated and reflect the values that we hold true to and the experiences that we're bringing to our customers. Right, we're continuing to modernize this physical security industry, and we have customers continuing to come to us and looking to the next phase of what they're looking for. And we're going to continue to deliver safer environments for those customers with the proprietary AI that we built and integrate into our security solutions. So, we're on a good trajectory right now and feeling very, very good about the business and the business future. So at this point, Will, I guess we just need to thank everyone for joining the call, right? And we look forward to talking to everyone soon. And if and as we can, we'll try and get to a few of those other questions we couldn't get to in this time period.
Thanks again, Peter and Karen. Thanks everyone for joining today's earnings call. The recording for today's call will soon be made available on Xtract One website. And if you have any additional questions that have not been addressed on the call, please feel free to email us here at Xtract One. That's the number 1, Xtract One at rbmilestone.com. Xtract One at rbmilestone.com. This concludes today's call, and I hope everybody has a great day. Thank you.